I'm delighted to be at the FinTech Festival. My compliments to the organizers. I've been asked to share my thoughts on the India story, a path to a 7 trillion economy. I'll just add a line to this, and a path to a 25-year, 25 trillion economy. I think that is the aspiration that India has, not just a path to a 7 trillion economy, but a longer path. And then that's a path that I would like to talk about today in the next 8 or 9 minutes that I would be sharing my thoughts with you. But I'll start with COVID, because a lot of things happened to us in India in terms of the economy and where we are going when COVID hit us. COVID taught us to be agile and nimble, because you were boxed into your home and they were to do everything from home. And the key part of that was payments. So you had to embrace technology, and you had to embrace technology irrespective of your age. So technology became all, enveloping, as it were, with people 60 and above, 70 and above, also learning to use technology in their lives on a day-to-day basis. And you learn to do it on in real time, and as I said, on a continuous basis. And outcome of this was the growth in UPI, the Unified Payment Interface, that you see in India as the default payment option that is being used today. And that has spread. And of course, there are other reasons why it has spread. We'll talk about that as we go along, but that has spread. So this is one underlying theme. The whole digital economy took off with COVID and gave a strong foundation to that leap, as it were. The second, which is rather unexpected, was productivity gains. Because without those productivity gains, we would not have a path to a 7 trillion economy. So what I realized was that within the first 8 or 9 months of COVID, companies that started coming back into selling what they were manufacturing, and they were operating at 100% capacity utilization, or near 100% capacity utilization. When I checked with industry bodies, I was surprised to find that only about 75% of their workforce was back on the shop floor. So what then happened? How did they reach 100% capacity utilization with, say, 75 or 80% of their people back on the shop floor? When I dug deeper into this, we realized that companies had taken several steps, primarily process change and automation, to get to 100% capacity utilization with much lower staffing, clearly resulting in productivity gains. The financial numbers of corporate India 9 months after COVID hit, say sometime in early 2021, indicated virtually a 25% bump in profit. And of course, the top line also had grown significantly year on year, comparative period being pre-COVID. So the productivity gain was visible, and that made companies much healthier. A healthier company led to healthier balance sheets, both for companies and for banks. I'll give you a story, take me 30 seconds here. When COVID hit, the central bank of the country, the Reserve Bank, set up an expert committee to restructure anticipated non-performing assets. And the estimation that was done by rating agencies, we had discussions with the rating agencies, with the industry groups. I was in that committee, I was the chair of that committee. We estimated that 100 billion in dollars in assets would need to be restructured. This is sometime in mid-2020. That was the estimate, 100 billion to be restructured. But with the sort of cleanup that I just mentioned, a year later, when we actually shut shop, the expert committee shut shop, that is in June of 2021, we were hardly required to do about 5 billion in restructuring. So 5% of what we had projected needed to be restructured was done. The rest of it sorted itself out on its own. And that meant companies were in a much healthier position. They repaid their loans, and we came out of COVID with what we call the resolution of the twin balance sheet problem. The balance sheet problem of corporate India and the balance sheet problem of the banks, both were resolved. And we had a situation where companies were deleveraged with plenty of space to grow. I thought it is important to put this in context, because that gave us the point from where we leapt to this path of higher growth, and in a way embraced it as a way forward. Question now then arises: if this foundation is there, what will drive further momentum and create new opportunities on this path to 7 trillion and then on to 25 trillion. I think the first point that comes to mind is India has unending space to grow for the next 25 years. The simple reason being, India is yet to be built in all areas. I won't take time spending this. You take any area of infrastructure, there is space to be built. Urbanization, modernization. If we look at any area, and we have enough to do and rebuild in this country. And then we have one more layer that we can add to that, which is green, clean, sustainable action on that front, which is again today a global need, and India indeed is going to embrace this. All of it should support near double-digit growth. Anybody who tracks India would have seen that we are already at a steady 7% plus, and I would take that as a given. So that to me is the base. Secondly, I think one was unending space to grow. The second point that I would highlight is an aspirational India. A young India, everybody knows that India is a young country in terms of its demographic, but this is now an aspirational India powered by the rise of technology. Everybody is a technology user and will use this going into the future to various effects, which we can just articulate in the next couple of minutes. I would use a phrase here. They would use, the young India would use intelligence as infrastructure. Of course, the hard infrastructure is there, but with the rise of technology, intelligence will be the infrastructure of the future, driven by our people and our data. And along with this, clearly a digital super cycle is built in. I mentioned briefly the UPI embrace of UPI that was done during COVID, but that then gives you a digital super cycle, which in my phrase, I will use maybe 4 or 5 descriptors to describe this, which is demographic, a digital super cycle, which is demographic, democratic, dematerialized, disruptive, and demonetized. Demographic, it cuts across demographies. Old and young both use it. Democratic, you can look at today a cell phone providing you all sorts of connectivity to the rich or poor. And with the data affordability in India, it has become universal. And with AI, if I were to add AI to that layer, I would add a phrase, democratization of intelligence. Intelligence has been democratized. It is now anybody's, nobody can keep it bottled up, as it were. Dematerialized, the single device does 10 jobs. Digital and disruptive, everybody understands. Demonetized also, everybody understands today. Asset-light models are the norm. So all this coming to play will drive this digital super cycle in India, which has already begun. And digital startups are driving this today. And we have probably something like 100,000 startups already there. Started with Digitech, then went on to FinTech. And in the last few years, the FinTechs have gained the pace, as it were. And the new startups are happening probably at 10K to 15K per year. These are a source of employment. And clearly, there is no funding shortfall here, but these are equity funded and they're well funded. Now, further, this disruption that is taking place in this area, tech costs are dropping. And I like to say that AI is the new Moore's law. I won't articulate what is Moore's law and what is the AI law today, but suffice to say that the rate of progress in AI and development is far greater than it was in technology given Moore's law. And Indian platforms operating in a variety of ways have done elegant uses of, have made elegant use of technology, and have made enormous advances in whatever they are. Earlier, I would say technology was a bar. For India, now it is a change agent. It's low in cost, it's easy, it is adaptable, and it works. And here I would add a line, it works against incumbents if they are going to be stuck in the past. So in the area that we are talking of, whether manufacturing or whether financial services, any incumbent who is stuck in the past is going to find challenging times going ahead. This will provide us, as I said, these changes and rapid changes provide us the boost in the digital and the technology-led opportunities in India. This digital economy would add to that 7% growth that I mentioned earlier. And if I look at examples, say from China, where the digital economy is probably between 30 and 35% of the overall economy. And in our case, it is probably just now less than 10%. even if we grow by another 10 to 15%, you then are looking at growth which is near double digits, say 9% or so, heading towards 10%. And of course, as I briefly mentioned, the sustainability super cycle will add further momentum to India, to the India growth story. Then what then do we need going ahead to make this happen? Just a few pointers as I conclude. I think one is, to us, the last 3 years have been a learning experience, a transformative experience. More has changed in the last 3 years than in the last 25 years in India. So the CEO who will drive and support this growth will need to be a tech architect, and we will need to believe that we will live in a world of continuous disruption. The fight will be to learn how not to be obsolete, because obsolescence is going to be there at every turn. And we will need to continuously reskill ourselves. And of course, we will need the government to facilitate all these things as we go along to make this happen. Finally, to conclude, just 3 points. I reiterate, the India growth story is a long 25-year runway, where we hope that at the end of it, we hit 25 trillion in terms of GDP. Digital will give a big boost to this story as we go along. And this growth agenda, indeed, will need to be driven relentlessly. Thank you for giving me these 10 minutes to share my thoughts as we go into the panel, and my good wishes for the festival. And I'm sure it will be a great success. Thank you.